Hey everyone, John Henry here, slingshotfutures.com. Today we're going to be talking about an interesting mover on Tiffany & Co., symbol TIF, Tango India Foxtrot. Now, Tiffany's, I'm sure pretty much everybody's heard of Tiffany's, the luxury necklaces and all the other stuff, yeah. One of the big things that they had was earnings. And obviously, looking at the chart from yesterday, we can see that they were trading at around 129.70s, 130s. After the earnings, they spiked all the way up to 140s. So a really, really big move to the upside. And if we look at the earnings report, we can see that it came out better than expected by, well, 12.5% as a surprise number. They were anticipating $1.05, came out as $1.17. That's a pretty big difference, and obviously that is quite bullish. But then we look at the chart for today, after knowing that the earnings were coming out, they came out better than expected. What happened, right? Why did it collapse all the way back down? What were some of the factors, or what could have been some clues to know that, hey, it may be up $10, and even right now it's up 1.35%. What are some clues to not necessarily be a buyer, or at least not be a buyer yet? So, first of all, we start off, we had the earnings come out. Obviously, they were very good. It causes a spike all the way up to the highs. But this is where some problems start coming in, because when the market came back up to those highs, it acted as resistance at that 140 mark. Now, the reason that area is so interesting is actually a couple different things. First of all, that's the initial spike after earnings, which is a big area of interest. Along with that, when the market came back and retested it, it failed. Utilizing some psychological levels, it's $140, that big round number. Now, it's not quite like $100 or $50 or $75 or anything like that, but it's still a whole $10 value, and those tend to be a little bit more important, right? Now, we know with pretty much everything, whole numbers are pretty important. You know, if you're trading at a $10 stock and it goes to $11 is going to be pretty interesting. But those whole 10s, 20s, 30s, are relatively important, and even more important than that are 50s, 75s, the quarters, and then you have the big ones, which are the hundreds, 200, those kind of things. In this case, we came into 140. Now, that by itself, who cares? $140, whatever. It could have held off 139 or 138. It could have held off of any of them. But the fact that the market spiked up on earnings up to 140, stopped dead in its tracks, pulled all the way back down, as we can see right over here, at 133, and then went all the way back up again, a $7 rip back to the upside to find resistance there once again, and then drove all the way back down. There is something wrong. That's not a good sign of continuation. So this is where we have to start thinking, okay, well, wait a minute, right? We're finding double top resistance. We have a whole $140 value here. They're not getting it going. If the buyers were going to take over, they should have just rocket shipped through that on the next attempt. So this is where we zoom out to a daily chart and say, okay, well, what are some things that we need to factor in here? Well, this is yesterday's candle, right? And they closed right here. That closing price is that purple line, 129.78. And when it came time to try to get anything moving, where are we? Well, where are we right now? We're at the lows of a major swing that just failed. That's a big problem. So we have a lot of things that are working against that potential up move that has already occurred, right? The move up that buyers were anticipating, buying off of this level of support, that already happened. And it happened with a catalyst of earnings into a major level of resistance at 140. And if we look over here, where's 140? Right at the highs. So the fact that 140 is coming in, we're finding resistance there, we're finding the $140 whole level there, we've got a double top there, and the buy move that buyers have been waiting for a long time has already completed by the time we come in today, we're more likely going to start seeing some profit taking. Everybody bought into the pre-market, and they're selling out as soon as it opens up. And we can see that reflected in the price chart. Because right when the market opened, what did it do? Took a quick little pop higher and then collapsed all the way down from, 137.5 all the way down to a low of 132.5. I mean, it basically shed $5 in 2 minutes, 3 minutes, just gone. So with that amount of pressure, that's a really big clue that there probably aren't too many buyers interested. Now, caveat, when the market comes back down to that level of support, even a gap fill, it could be the swing low retest, any of those, that's where the buyers might regain the interest to try to shove the market back up again. That is exactly what we had today. So today on Tiffany's, even though it looks absolutely beautiful, they had awesome earnings, everything looks great, the daily chart's bullish, well, those extra factors that we just talked about told us that we shouldn't be a buyer here if we see signs of selling. And that actually offered up a couple other opportunities that we talked about in the live trade room today of selling below here, selling below here, selling here, and looking for that continuation to the downside. It offered up a ton of potential trading opportunities for shorts. But when we start getting into that level of support, we filled the gap, and look at the support that came in off of that gap. Immediately bounced in, and now look at that shelf, right? That shelf is no joke. There are buyers that are coming in, and they're coming in pretty heavy right now, and that's because we're right back to where they wanted it in the first place. Remember, if buyers were looking at that daily chart and they wanted to jump in for the move up, they missed it. It opened up way the heck up here. It's gone. Now they have a chance to come back in again. So there was a lot of clues telling us this morning that Tiffany's probably going to be a failure move and a gap fill type scenario. Generally speaking, when you have a move of a market, especially after earnings that's up 3, 4, 5%, the gap doesn't typically fill that day. Usually it takes a couple days, sometimes even longer, to fill in that gap. But when you have factors like this that are telling you, hey, you might want to start paying attention to the short side, well, that's when they'll start looking to fill that gap and take the low probability route instead. Awesome trading opportunities today on Tiffany's. I hope you were able to grab some. If not, it's a great learning experience one way or another of things to consider when you're looking at either a continuation play or a failure play to go against it. Hope you learned something. Hopefully you found it interesting. Don't forget, underneath the video, click on the subscribe button right there, and to the right of that, click on the notification bell icon so you're notified every time we launch a video. We launch a video typically every day, sometimes more than one. You don't want to miss any of those very important videos. So, aside from that, like I said, I hope you had a fantastic trading day today, and as always, we'll see you in the next one.